Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel O'Connor.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Hope everyone had a good weekend. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel, joined by Joel O'Connor and Dennis Dick. Got a couple earnings still trickling in to discuss today. JD.com, Cisco, CSIQ, but we're really going to talk about Tesla. Had a lot of news. Netflix getting cut in half in Barron's over the weekend. Going to talk about that as well. And I think we're going to keep talking about this Viacom thing. VIA and VIAB just can't seem to get a handle on why these two stocks are trading so far apart. So we're going to get to all that. As always, we'll get to your questions in the chat. Our guest today at 8:35, Tracy Rainey, a stock strategist at Zacks Investment Research. Joel, let's get to the markets. How are we doing?
Well, personally, I'd like to see that spread come back in line so Dennis will stop talking about it, right? We hear about it every day on the pre-market show, but maybe he'll just have to get in there and make the change.
Don't get me started.
Okay. All right. S&P futures are up 12 and a half stakes. We opened 41.50. That was your dead low. 55 and a half. That's your first target. That's the pre-market high. And I'm looking for the 50% retracement of this move up at 59.50. We can keep this rally going. We have crude trading down 27 cents here, 48.55. Really no clear trend here, except this thing doesn't want to hold $50, and that's the big psychological level as well. And gold and silver, if you're buying stocks and bonds, you're selling gold. Gold down 570 at 1288.20, and silver just hanging out right at down 7 cents at 17 even. Good morning, Dennis. How was your weekend?
Not too bad. It was I did a lot of nice boating yesterday on Georgia Bay, so that's always nice when you're out on the boat, out at the beaches. Kids liked it, so had a pretty good weekend. How was yours?
Good. Nice and relaxing. Back here to view this honey badger market. I mean, we missed the correction. It happened on Thursday.
It was there. I mean, whenever there's BTFD, we never talk about on the show. We can't say the third acronym, but buy the dip. That just works. I mean, it continues to work, especially on the S&Ps. And we've bounced here again. I mean, there was no nuclear war over the weekend, so I guess we got to go to all-time highs, or at least to go back up to near the highs.
All right. So
it's this market. I mean, there's been too many people underinvested. It's the same thing all the time. So, it's the same stocks that continue to lead here, too. I mean, this morning, if you want to really see what's flying, it's Tesla once again. I mean, multiples be damned. We don't care about multiples. We don't care about, all we care about is growth. And Tesla's going to have the growth. And that's why it's up another 6 points here this morning. You've got Baird and Morgan Stanley both raising price targets on this stock here this morning. And Tesla, here we were talking about 300 a month ago. Now we're talking about all-time highs. We're not that far off.
No, I mean, you talk about psychological levels too, and everyone waiting for 300, right? It didn't quite get there. Dennis, you made a swing trade down there, didn't you? Did we talk about this on the show the other day? Didn't you take a little poke at it at like 3?
Wow, it was a day trade. I wish it was a swing trade. I'd still own it. But yeah, I bought it down, and when it's getting close, and in the 310 area, 309 area. And then I ended up making 7 or 8 points on it. And that's the only trade I think, and I've had some little overnights, little day trades in there, but that was the only one that I was like taking a kind of a position on, but obviously didn't hold it long enough. And, the day trader blood in me always gets me. I got to squeeze some of that day trader blood out and start holding stuff a little bit longer. Should have stuck in my investment portfolio. I went and looked at it, but 364 this morning, man, the stock is back.
All right, pre-market high, you're finding a little bit of resistance, not much here. We'll just give you the pre-market high. Your pre-market high stands at 65.20. Really, if you're holding out for the recent high of this move, 370, that's only a 6.5 points away. So that could be a target. That's been the high of the rebound. And then go back a little farther, and you'll see there was some pesky highs at 371, 371.74, and that's before we had the big breakdown in the issue. So if we get up into 370 handle, see if we find some sellers. All-time high, 386.99 in Tesla, and looking good here on the charts.
Yeah, and you got a lot of the other ones moving here this morning too. It's going to be, if you want to just look at FANG this morning, it's all up more than the market. Facebook's up $1. Amazon is trading up 6 points in the pre-market. You got Netflix Netflix is down. So Netflix is the only one that's actually bucking the trend. Why is that? Is that still just continuation here from getting dumped by Disney? Is there a rating change, or is there anything on Netflix this morning?
Obviously, obviously you didn't read your Barron's.
Actually, Netflix has.
Oh, was it Barron's?
Well, so a couple of things. There is the Barron's thing, but also Netflix got some revenge on Disney. They poached one of their star showrunners, essentially just signed on to Netflix. Like the woman Shonda Rhimes, who's produced several hit shows for ABC, is now over to Netflix.
Ooh,
so they poached her. But what was the Barron's thing, Joel?
Oh, basically that this was the start of something big with Disney withdrawing, and kind of your Michael Pachter argument, the big cash burn, not owning the original content, or really, eventually he's going to catch up with them. They're looking for this thing to get cut in half.
Really?
Yeah.
What was do they give a price target?
Yeah, 50%. Do what
to say 50%? They're cutting it in half.
Yeah.
Wow.
Yeah. Yep. Pretty bold move. I can actually read it to you. Netflix, cash burning Netflix is vulnerable as Disney shies away. Amazon looms and Facebook muscles into video. Shares could fall 50%.
Wow. You know what? I've been saying competition for a long time, but I've been wrong all the way up on this thing. I've been saying competition since I think about $100. And it got to 190. So I've been bearish for a long time. I guess, it's coming around a little bit lately, but man, I've had this one wrong too. Tesla and Netflix, I've been wrong on those all the way up.
I did see a chart there that showed just the sheer amount of Netflix that people watch compared to like the other providers out there, compared to Hulu, compared to everything else, compared to HBO and HBO Go. Netflix had such a head start, like a 5-year head start at this point, that I think they have some cushion, just because they were the first to market by like 5 years.
For sure. So there's a good point there.
Such a head start that it'll take a while for anything to really impact Netflix, I think, in terms of just sheer hours watched on the platform, just because Netflix is the gold standard in that area. So it could happen, but it'll take a while.
Flack UK, is HBO quoted? Now, correct me if I'm wrong, but HBO is owned by Time Warner.
TWX.
Yeah, TWX, which is now
going to be AT&T.
Which is AT&T. So, take a look at T, but I mean, it's probably a small fraction of that huge conglomerate. Yeah. But I don't know. I mean, I don't watch that much TV. I finished the House of Cards, and I'm waiting for Michigan football. Is there anything else on TV to watch?
I watch hardly any TV. The only thing I would watch is the news, and I watch my Twitter timeline to get the news a lot of times too. But my TV hardly ever goes on. I guess when you got 2 kids and you're cottaging, you're doing stuff, there's just why bother TV? I'm waiting. If the Tigers were better, I'd be watching some baseball. But every time I flip on the Tiger game, they're losing, and it just ticks me off. So I don't watch that. Hockey season is coming though, so McDavid. So I'll be watching some Oilers hockey. But besides that, I don't watch a lot of TV either. I do watch the odd Netflix series, but the House of Cards is good, but I wouldn't say I'm an avid, Netflix watcher, although I do have an account.
Didn't David McConnor, did he get hurt?
David McConnor. Okay, enough talk from you. Making fun of
all right, 170.
Everybody's going to hate me for that comment.
I just want to say, I just don't know where this Netflix is going. You have a gap to fill here from earnings from the lower 160 handle. So am I buying it here at 170, hoping going back to 180? No. Would I get interested if this thing came back down to 160 and held and filled the gap? Yes. But man, oh man, a lot of air here, both on the upside and the downside in Netflix.
Okay, we do have a couple earnings reports here to talk about, and might as well get those by. JD.com is the first one. It was getting hit harder. It's come back a little bit here, but obviously not the report, not that investors were looking for, because the stock is trading down 3.5%. Spencer, JD numbers.
10 cents versus an 8-cent estimate on the EPS. Sales of 13.7 versus $13.3 billion. So good EPS, good sales, but I guess you're right. Not what they were looking for. Not good enough.
It sold off a bit ahead of it. I mean, everything was selling off, obviously, ahead of this, and then getting hit a little bit more. Tell us about the pre-market action.
Someone's making a stand here at 42 and a quarter. That's a little bit late now because you're $2 above that, but you had a triple bottom based on the 15-minute chart since 7:45 a.m. right at 42 and a quarter. Now we're on the rebound, so I don't expect us to see that level. Looking from yesterday's low, that's what you're looking for a gap fill. We're only 70 cents away from that, 44.91. So let's see what happens at 45 if it gets a rebound. And that's what you're looking at. And that 42 and a quarter, you're just going to look. You had a couple lows back in mid-July at 42.40, 42.51. So a couple lows in that area coinciding with your pre-market low.
Also reporting this morning, Canadian Solar, CSIQ. I own this one in my investment portfolio. It's down 33 cents here. Spencer, details.
Actually haven't seen that number yet. Did they report?
We haven't seen it fly by? They're due to report.
I know they're due to report. I don't know if they reported yet, honestly, because I haven't seen the number.
Okay, anyway, somebody's hitting it ahead of the report then because it's trading down 30 cents in the pre-market here. I can dig a little bit too at the same time, but yeah, I haven't seen that go by either.
Bunch of lows. I'll just give you the daily setup for this. A bunch of lows at the 1620, 1630 area. That is your support. Coming up on the upside, man, if it gets a real nice boost, gets into the 18 handle, look out, 1792, 1784. Well, it hasn't even quite got to 18. Yeah, I got one spike up to 1812, but 18 on a good report. To me, that's a good resistance level.
It did report here over the weekend, and it does look like it's beating by a penny. They lost 15 cents. I think they were supposed to lose 14 cents, and the revenue was $692 million coming in, and that beat as well. So slight beats, but not very big beats here for Canadian Solar. And after First Solar blew it away, I guess not surprising the street's somewhat disappointed.
All right.
And yes, Chef, I still own my CSIQ. Sticking with it for a while. It's in the long-term investment portfolio. A little bit of exposure to solar. Not sure. I was talked just because Gordon Johnson, so I'm going with Gordo.
All right.
And then the last one, if we want to talk about it, is Cisco, and not CSCO, but SYY, the food company there. I have not seen any trades on this yet, so I'm not sure if this one's reported yet or not. You have SYY numbers, Spencer?
No, don't have them.
Okay, so maybe this it's on my list to do to report, but it hasn't any action here yet. So maybe Joe can just quickly give us some technicals here.
51. Ahead. I like 51. That better hold up on the downside. Last two lows just under that area. Another low in that area back on July 24th at 50.93. So 51's your support. You have to hold. Spotty up to 53 here. I mean, you could make a case for finding sellers at 52.18, but if it's a real good report, the rebound high off that low of the move, 53.03. So half and whole numbers working in Cisco. They make the grease, right? That comes in the can, the shortening. Isn't that Cisco Foods?
They make a whole bunch of stuff.
I just remember seeing it on that, but I'm not a great cook, so don't quote me on that.
So two things I want to talk about, which Joel doesn't want to talk about. One is DryShips, and the other one is Viacom. So which one do you want to do first?
Let's do DryShips. I think someone said borrowing costs for DryShips is like 90%.
That's not surprising. I mean, that's not surprising at all. But what is surprising, this thing quickly gave back, and what probably isn't surprising, that it quickly gave back everything. I mean, the pre-market didn't it hit almost $6
on the nose on
Friday?
On the nose, $6.
What did it hit?
6 even.
Yeah, and they never even came close to that in the regular session. Obviously, Friday went back down through 5. I said it might hit 5, which it did in the pre-market. It hit it like a minute after I said it. 423 was the high on Friday, and it just kind of leaked the rest of the day. The one thing I will say is, and what was that price on?
275.
275. So, and we were saying that could be like a floor for the thing for
Correct.
a while. Well, it kind of bounced off there on Friday, got down to like 287 or something. So, it's not surprising you're seeing some demand coming in here at $3. I don't mind this for a trade around $3. And this is probably the first time I've ever said on the show, I don't mind a level in DryShips, because I've always just said this thing just keeps continuing to go down forever. It might, but that 275 might put a floor under it for a while. So, and there is, a huge borrowing cost. There is a difficult thing, and shorts got squeezed hard on Friday. I wouldn't be surprised if they are still continuing to bring it in. As long as 275 holds, I think the stock actually could move higher. It starts breaching 275, going 260, and I don't want any part of it. So make sure you always have an out. My out would be about 260, 265, just below that 275 pricing from Friday.
I'd like to see some pictures of their ships and like one actually getting loaded and taking stuff and see if they like if they
actually have ships.
A real company. But S&P's hanging out near the highs of the session, 24.54. Our pre-market highs 55.50. So no give yet in the S&P futures. We've traded nearly 200,000 contracts of the roughly 1.7 million that will be traded by the end of the day.
And he tried to quickly change the subject because he didn't want me to go into Viacom, but I have to mention it again here. Okay, so I did calling around on Friday. Like I tried my own locates. I cannot find locates for VIA. I actually called around, went to even through my GS. I couldn't find it there. Interactive Brokers doesn't have any. They often have some. I didn't try this morning yet. So, but as of Friday, there was this very difficult to locate the VIA, not the VIAB. That's liquid and that's easy to borrow. It's the VIA. And why do I keep talking about this? Because this is a spread that has held forever. I mean, VIA, has always traded a little bit of premium to the VIAB. Well, now the premium is 11 points, and it's just sudden. So if you look, in the last year, really take any pricing points between the VIA and the VIAB. You've got, a difference of usually maybe $2 or $3. Now you're talking VIAB closed at 30.11. VIA closed at 41.35, which is significantly above where it was before the earnings. The VIAB, which is the same company, is significantly below where it was before earnings. These two stocks track like 99% with each other, but not in the last 4 days. It's completely blown out. So everybody's saying, well, why does that happen? How does that happen? Main reason here is the VIA became very difficult to borrow a week ago. So you've got shorts that probably have the spread on. I actually had it on a week ago, but I blew out of it. I'm glad I did because I would have got killed because it's been straight up since. But you have, even professional traders that are, basically, saying, oh, well, this thing's 5-6 points. It's going to come back into the 3-point range. So they put it on. They buy the VIAB. They short the VIA. They are getting the hell squeezed out of them. Not only that, they could be getting bought in because remember you have 3-day settlement, which we are going to 2-day settlement on in September. And all of a sudden you've got if you've got a broker that can't locate your stock that you've been short, they can actually go into your physical account and buy you in. They physically buy the stock on you. So you didn't buy it, but they can force you to buy the stock back into your account if you're short. I think some of that might be happening in VIA. Like I said, I cannot locate it. So the lesson learned here is you have to be very careful when you are shorting thin stocks, because if all of a sudden the borrow becomes tough, if all of a sudden you can't get a locate, it doesn't matter if you're going to be right in the long run, you will get bought in and you will, lose money significantly potentially on it. And the poor VIA shorts here, who fundamentally are probably right with this trade by shorting VIA, VIAB, are probably getting blown out of it, not only because of them moving up, but because they're probably getting bought in. I cannot find a locate. And if anybody has a locate on it, in the chat, let me know. But I even asked on Twitter, I believe, or on StockTwits, I was asking too, on both venues there, just if anybody had a locate. Nobody had a locate on VIA. So it's a tough borrow. A couple reasons for that. A lot of it is held by Redstone. So maybe Redstone all of a sudden is saying, you're not lending my shares anymore. I think it's like almost 80% of it is held of the VIA is held by Redstone. So maybe something happened fundamentally there that he's not lending it out. Now it's difficult borrow, but for whatever reason, this has become a tough borrow on the street, and it is moving the stock up significantly. So it isn't moving up on fundamentals right now. It's moving up because of the locate.
Real quick here, Brentster. No, take control. Brentster is going to try and get the stock up here. I should know how to do this to get up the price of another stock, and just to show the
difference.
Yeah. Oh yeah. Oh, good. Spencer knows how to do it. Let's go to 2, and then gets.
You can compare them. Those charts will be identical to each other except for the last week when one went straight up and the other one hasn't moved.
Exactly. Yep. You see that they had 37 to almost 42. This thing hit 29.65, and now we're stuck here at 30.66. So I guess you still you can't put it on even if you want, right? Because of the locate.
Well, yeah. I can't. If you got a locate, you might have one, but you might be able to do it. But I'd be scared to right now because this thing is going straight up because shorts are getting squeezed and shorts are potentially getting bought in on it. So that's the major consideration here and the lesson I just want to preach on this, I'm trying to always teach a lesson here on the show, is when you are shorting thin stocks, sometimes really bad things can happen. And this is one of them. And Viacom, you can say, oh, this is a liquid company. Well, VIAB is. VIA is not that liquid. And, you know, if it's all privately held by Redstone, he says, nah, not me. I don't know why it became hard to borrow. I'm just speculating that maybe something happened with the Redstone shares and they weren't getting lent out anymore. Maybe, you know, he was mad because of the earnings report, just pure speculation. But maybe, you know, his company's going down. He's like, I'm not lending my stock anymore so people can short it because I'm mad where the pricing is. I mean, if I owned 80% of the company and, you know, I'm, you know, Redstone, I'm rich like that, you know, maybe I don't care about getting a little bit more money for, you know, lending my shares out. Maybe that happened. Something happened, though, with VIA to make this very hard to borrow on the street.
And just one thing to conclude this, I mean, you talk about arbitrage, right? And supposedly
this is arbitrage.
Yeah, I know, but supposedly, theoretically, it's supposed to be safer, right? You know, in some respects, if you're doing arb between stocks or pair trading or something, you're supposed to somewhat be mitigating your risk. But here's just a great example where no, you know, having the arbitrage situation is blown out. And you know what? We'll find out here, not in a day or two. Maybe with Benzinga can do some digging, maybe get the Redstone family on the show, even though
yeah. Did you stop lending your shares out, Redstone?
Yeah, no, it's it. Have you ever seen this happen? I mean,
I've never seen this happen.
BFA Brown Forman?
You know, and between the different share classes, there's not a lot of stocks that do this. Google is one of them now that has obviously multiple share classes with Goog and Google, but they're both pretty liquid. I've never seen it happen. Like I said, I traded a lot with Viacom, so I can really, you know, relate to this. And I really feel sorry for the people who had this on, because this is something that has worked for years, you know, trading these against each other. And right in the last week, it's probably ARB traders in this, probably losing months or possibly even years of earnings on this. You know, this is, you know, you're jumping this thing sometimes for, you know, 15 cents, 20 cents, sometimes even nickels and dimes. And here it is all of a sudden, you know, blowing out 8 points on you. Oh, that is shocking. And it's crazy the media doesn't pick up on stuff like this. They just don't care. They want the major stories. But this is, you know, back to market structure. This is, you know, an argument that, you know, when stocks become, you know, hard to borrow, you've really got to be careful. And people just want to randomly short everything. Well, all of a sudden, you can't get the locate. It doesn't matter if you're right. It doesn't matter if you're fundamentally right. The thing's going higher. And people saying, should we just buy VIA? Or you know, should we, you know, be coming in here and playing this? It's late to the party now, and it's out to lunch. And then Joran Smith making a point. He's saying, should we buy VIAB? Because VIA is getting driven up so much, it's going to drive up the VIAB too. There's an argument there. But I think, you know, it's kind of surprising that VIAB isn't stronger. It almost tells me that there's, you know, so it's still some major issues here, because VIA rallies $6-7, VIAB rallies a point. It's lagging so much, you know, and I would imagine almost all of that is probably just because of people buying VIAB because VIA is going higher. That might be a crowded trade already too. So I would definitely want an out if I'm going to just buy VIAB up because of VIA going up. I would, you know, have my out. You know, things started getting back below 30, I'd be scared. But there's a lot of traders who are on the wrong side of this right now, getting killed.
All right, real quick out of the chat, who's asking about this? Marcos, who may be new to the chat. He's asking about PetIQ. It's up in the pre-market. Quiet period ends today for the stock. I did pull it up. They did have some earnings here at 8:01 a.m. They just showed some sales. Sales 87 million versus 61.28 million. So that's good. Let's take a look at this. With the quiet period, I don't know if analysts are going to hop into this one yet. I can just tell you right now, some resistance here in the pre-market at 24 even. You got two tops there at 23.98 and 97. And then in the daily charts, it stopped just under 24 a few times. But then you had a spike up to 24.74, and the all-time high is just over 25. So we'll see if we can hold those pre-market gains to get up to make a new all-time high. Do we know what? I mean, there's obviously this has something to do with pets, right? What is it? A pet supply?
I have no idea. I don't trade the stock.
I'm looking.
I don't think so.
Curious too.
PETIQ, and this is obviously near company here.
It's PetIQ. It's PetIQ, and they do. They're a pet medication company. And health and wellness.
Online, I assume.
Yeah.
Or they have physical stores?
That's a really good question, actually.
They're probably online. Everybody's starting online.
Now, you see, I would have thought it would be a company that tests to see how
they're
smart.
A manufacturer is what they are.
To see how smart your pets are.
Yeah.
No, and it's not. But
get those animals on TV, the good ones.
Looking good. Oh, up on only 2,700 shares here. So
no physical stores, Marco says, and they produce over-the-counter pet medications. Everybody loves their pets, man. Aging population. Everybody's got pets now, so you can't argue with that. Demographics are in there. Remember that book, Boom, Bust, and Echo? Do you remember that book? I think it was Foote that wrote that years ago. Do you remember that one, Joel?
No, I don't.
Anyways, that's all about the demographics, and that's all about the aging population. You have the boom, which was, after World War II, which would be you, Joel. You were part of the boom era.
I'm kind of the bust.
You're a little bit of you're a little bit towards the end of it. I'm in the full bust. And Spencer's probably in the Echo generation. We got all.
No, he's a millennial.
Or is he a bust too?
I am technically a millennial. Yes.
Yes.
I'm like
so he's an Echo generation.
I'm right in the middle of that demo. So
okay, so so you have the boom, which was a huge population. The bust, there's nobody in the bust because that's where there's not as many people in that demographic. Then you have the Echo. Well, you have the aging boomers that all of a sudden their kids are all gone and everything. They all got pets, and you get older. If you're getting to making fun of you, Joel.
I hope Perry's not listening to this show.
What's that?
Perry being your dog.
Perry listening to the show.
Joel's got an animal. So, So I like that. From a boom, bust, and Echo perspective, if you're investing in pets, all these older people are getting pets.
All right. Let's switch to Mexican food here. Someone asked on the chat about CMG. Getting a little bounce here, up 240. I don't know if we've had any relevant news on it. If you're trying this thing, you're trying for a swing trade and you have it between 320 and 328 where it's trading, man, you don't want to see this under 320. You do not want to see it taken out that low. If you want to be a little peskier, the low close of the move was 22.65. So those are the two.
I think
levels.
It's time for a squeeze in this.
You do?
Yeah. I'm bearish, CMG. I think it's going under. I think 6 months from now. I think 3 months from now, it's under $300. But I think it's going to have a squeeze in there. I'm hoping for a squeeze. So I want to short some stock. So I'm hoping this thing, and I think this thing could actually maybe get up to like a 50% retracement of the recent move. So we'll take this 355 down to 320. Joel's better with the euro math than I am, but that's, I think, 35 points. Let's add 35 on to or half of that, which is 17 on to 320. Give you to 337, 338. I mean, that would be a retrace, 50% retracement of the recent move. I think you could see that. As long as there's no headline that comes out before that. I still think there's going to be a headline eventually breaking, though, where they're going to lower guidance. I'm still going to call it. I think they're eventually going to lower guidance as well.
Okay. And just from we always talk about looking to the left side of the chart. Who is that? Wally Oladepe, who comes on? He likes to talk about the right side of the chart. So I think if you're long this thing, I mean, you don't want to see it maybe just bolt to 340. That might be a little too much too fast. But if you can hold this bottom, right, build a little bit, stay in this area for 1 or 2 days. And I'm not calling a head and shoulders bottom by any, I don't call shampoo formations. But if you could if you could just hold in here over the next couple of days, between, not make the low of the move, and then let's say get back over 330, then you have somewhat of a bullish scenario for it. But if it just, has like an 18-point up day or 20-point up day, you're right back at 350. I think that'd be a little bit too much too fast. So see if you could get a little consolidation and hold that low at 320.01.
And major headline risk with this too. I mean, and the headlines are, we know what could happen. We've seen it before. If somebody gets sick for whatever reason, the media will blow it out of proportion. So, this is just, and people get sick at restaurants all the time. It's just that everybody's watching this one like a hawk. So they got to run like a crystal clean, like their reputation is so tarnished that they need to be running, as clean of stores and everything as possible. Over the last week, closing that one store because I had rats and stuff. I mean, anything that happens bad at these stores right now is going to get major headlines. So that's why CMG has headline risk as well. So that's the one thesis there, which would put a damper in our little short squeeze scenario.
The headline news can always affect it. Great point here, Dennis.
8:30 here. Let's go get the imbalances hot off the press, and I bet you they're all buy imbalances here. Oh, yes, they are this morning. Alibaba's back, 118,000 to buy in BABA. That stock obviously rallying significantly, really, from Friday's low. We got all the way down to 147 bucks. Now we're $6 up from that already. We're already talking about a 50% retracement of the move. Hasn't even been 20 or full trading day since then. Bank of America, 257,000 to buy. General Electric, 63,000 to buy. They're all small buy pretty much. Coca-Cola, 40,000 to sell. That's too small to the downside. ConocoPhillips, 76,000 to buy. That stands out. Your gold stocks are all going to have sell imbalances because gold trading down significantly here this morning.
Not that it's down $5, so I wouldn't.
Yeah, it's coming back a bit. It was down more earlier,
Yeah,
so
it was
coming
down
back
10.
a bit.
Right.
Yeah, not bad considering how much the market is up. You'd think gold would get hit harder, so that's a consideration. But yeah, so what do you think, Alibaba? I mean, here's one, we've liked. It kind of put a double top though around 160 and then collapsed through the 150 support. Got it right back though.
I was looking for a reason to buy this one after they came out and said that they're going to double their revenue or their sales. But I just never could find a good point. I was hoping for it to fill the gap down here at 125. Hasn't really done that. I don't know. I just can't find a good area. I'd be comfortable with the risk reward. Still a little gap down here at the 145 area. If you just want to be a Momo guy, if it could get back and close above 160, you see you made all-time high at 60.39, and then you kissed it 2 other times, but never closed above it. So maybe buying it on strength on the close above 160, but that always hasn't been one of my greatest strategies.
What about Twitter?
I knew you were going to bring
above
that
16. Up. And this thing, leaked. It's been really weak. Can we get a little bit of life here on Twitter here? Yeah. 2-day move, maybe.
Do you want me to put it back on my front screen or not?
Yeah.
Okay.
Yeah.
I'll put it back
I think this could show some life. It needs to really get over those highs around 1640. I think it's going to challenge the 1640 area today. I'm feeling
today.
I think today or the next day or two. It's a long ways to go one day. You're right on no news, 3, 4, 5%. But I think you could challenge 648 real soon. So I think there's 50 cents here. I think I want to see what happens around that 1650 area with all this.
Did you say today it's going to trade 1750?
1750. Look at how he look how he manipulates. Takes and tries to get me into a bet that I didn't even make. I say 1650, changes 1750, and then he jumps on it today. It's like, I smell a bet. I can get a lunch back.
I think, no, wait, I'm even on lunches. I'm just down to steak dinners. I am even on lunches, Dennis. I paid you one and I won one. I don't want to talk about it. We'll talk about it after the
7 at one time.
16. 16.
They had 2 steak dinners. Where are those 2 steak dinners?
1648. That is your 4-day high. Really nice consolidation. Twitter is a stock that has done this in the past and is actually finding support in the same area it did after it had the gap up after the report. So is some accumulation going on. If you're trying for a swing trade here in the $16 area, I wouldn't want to give it more than that low from Friday at 1567. So you're getting someone's interested in this thing under 16. They just can't get it to close over 16 over the last 2 sessions.
All right. So a couple more minutes here.
One more.
Yeah. We'll get one more stock in here, and it's going to be ZYNE, or as we say in Canada, ZYNE. Spinners asking about after another failed trial here. ZYNE down $2. Down 28%, one of your losers of the day.
Oh, it's down again here. Let me look at the.
They are on the hate on this stock. This stock back in April was $25. It's now $5. $5.
Let me go longer term. I mean, it looks like someone's trying to bring this in at 5, maybe on the short side here. Let's go to the weekly. 464 was a low that you had back in February 16. So if you do breach that $5 level, you can use that 464 as a reference. And I believe that's the all-time low as well. So, but you saw what happened to Fitbit when it hit $5, and where's it at now? 557. So
big numbers.
Yeah, big numbers. Also we talked about the other implications of a stock being above or below $5. But let's take a break here at 8:35, and we got a good guest coming on, and that's Tracy Rainey. She's a stock strategist at Zacks Investment Research, and she's got a lot to talk about with earnings season here. We'll be right back with Tracy. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel behind the glass. And our special guest is Tracy Rainey. She's a stock strategist at Zacks Investment Research. Tracy, how you doing today?
I'm good.
All right. So before we get to the unimportant stuff, let's talk about the important stuff. What is your prediction for Michigan football in the upcoming season?
I knew you were going to ask me this because I have to be getting excited now about the big game coming on Labor Day weekend. So I don't know, that opening game is going to kind of set the tone.
Did you hear that Florida got 7 players suspended yesterday, and one of them is their starting wide receiver?
No, I didn't hear that. Well, that should help the Wolverines.
That's right.
But it's going to be a tough season, I feel, in the Big Ten this year. There's a lot of good teams, and it's not just Ohio State. So we're definitely going to have our work cut out for us, but I'm liking where we stand. So I'm very optimistic, and I'm hoping this game gives us some good experience going into the Big Ten season.
4 teams in the top 12, and we play Wisconsin and Penn State on the road. So I'm already thinking about that.
And Maryland.
Oh, we play
tough
Maryland.
Game.
Yeah.
Tough game you're going to have there in Maryland.
Well, yeah, you have to have some of those, obviously. But yeah, it's gonna be tough for everybody in the Big Ten, but that's great. It's great for the conference.
All right. Well, let me know if you come in for a game, but let's move on to something a little bit more relevant to our show, and that's Q2 earnings and earnings reports, and they're coming in good, double digits with sales higher. So up to this point, before we get retail in there, talk to us about Q2 earnings season.
Yeah, it's been really, really solid. This is definitely one of the best quarters we've seen in probably 5 or 6 years now. And so far with S&P 500, about 90% or so has reported. And we have earnings up about 10.5% year over year. So that's pretty strong number. Now, only fly in the ointment is possibly the small caps. They're starting to report in big numbers now. They always go a little later than the S&P. And it's not been as good, but the data isn't as consistent with the small caps. And the small caps are still kind of struggling with being mostly domestic players. And they probably need a little bit of help here with maybe some tax reform and maybe even infrastructure to give them a little bit more of a boost. But the multinationals are definitely getting the boost in their earnings from the dollar.
Correct.
And then also, just global growth. It's stronger in a lot of the emerging markets now. We're starting to see China turn, even though some of their data last night wasn't so great. But then suddenly we get this, Japanese GDP number of 4%, and you can see kind of what's going on in globally. So that's helping the S&P 500 companies quite a bit, actually. And it's not helping the small caps quite as much, but I wouldn't say they're in a recession or anything, the small caps, but that is an area that you might want to keep an eye on. When that improves further, then we're going to see a really strong U.S. domestic economy.
All right. So with the tech stocks flying and leading the market at all-time highs, you're looking to other sectors to perhaps get a little bit of a boost, rise from the ashes. So we'll go into retailers second, but you have a particular interest right now in restaurant stocks. Now I'm looking at a stock like Mickey D's, and I'm like, I didn't want to buy that at 120, 130, 140, 150. That's at 160. Is Mickey, you look at them to lead the way? Is that one that you're including? Tell us about the restaurant stocks that you like.
Yeah, there's kind of 2 tiers in the restaurants right now. There's the big names that are doing really well, like you just said, McDonald's. Wendy's is also, if you check out their chart, similar. Burger King is now owned by a company called Restaurant Brands, which also owns Tim Hortons and Popeyes. So you get those 3 over there. But Burger King was their best performer. So some of these old line, big name burger chains are doing well. And then you have a few other side, like pizza makers, like not Pizza Hut so much, but Domino's is what I consider to be the king of the restaurants right now, basically even overtaking McDonald's now, because it's the only restaurant chain that's doing double-digit comps still. I probably won't be doing it for much longer because it's really hard to do year over year, even, with the growth that they have. But you got to look at the Domino's chart is crazy. But then you have the second tier of some chains that are really struggling. Like they might have done well in their home markets, domestically US. So I would put that in categories of like Potbelly's or even Shake Shack that was doing really well, dominating the burger market in New York City, and then decided to expand nationwide, go IPO. And it hasn't been all fun for them. Even Shake Shack is starting to see a negative same-store sales growth. They saw it 2 quarters in a row now. So that means their slightly more mature stores are having trouble getting that growth in the door. And you're seeing some of the chains starting to pull back on their national growth stories because of the competition. So if you might have been popular, say your Habit Burger, and you're really well known in California because that's where you're headquartered, but you're trying to expand in New Jersey where Shake Shack is, or they come to Chicago, which they haven't done yet, but they probably will, with Epic Burger and some of these other chains, and then you have even the other national chains like Smash Burger. Suddenly, you really have to be on the top of your game to stand out with all these names. And you can kind of see in the charts with a lot of them that it's not looking too good. The investors are definitely punishing those that can't get the growth. But I'm kind of looking around for some opportunities there. I was kind of eyeing a few names, and I was checking out the charts of ones like Noodles and Company. You might want to go look at that chart. A couple of years ago, it was trading over $40, and now it's under $5. So you have to ask yourself, though, when you're looking at some of those companies that have really seen a sharp sell-off, whether or not the chain is going to survive. I'm not saying anything about Noodles and Company, whether or not they are, but you do have to look at the competitive landscape and see who could be in it for the long haul, who could be possibly like the next McDonald's. And McDonald's, by the way, has really gotten kind of a second breath here. They've gotten some wind behind their back, especially with that breakfast, all-day breakfast. A lot of people thought that might have been just kind of a momentary boost, but they're really still seeing the effects of that, and it is working to draw in the customers. And if you look up, like even in Canada, they saw their highest comps in their Canadian stores in 5 years, at the same time that Tim Hortons, which is, a national, almost landmark type of company up in Canada, actually saw negative comps. So McDonald's is operating at a high level right now, and I still do like that stock, even with the run that it's had.
Tracy, I got a question for you. This is an ongoing debate on the Benzinger News Desk, but you brought up Domino's. Is Domino's Pizza a tech company?
You know what? That app kind of turned them into one. And if you listen to some of the discussions that the CEO has had over the last couple of years, he's talked about trying to hire people for the app and getting them into the headquarters, and how competitive it is, and that they are competing to hire engineers and people like that from companies like Facebook and these other tech companies. So in that way, yeah, you have to say that they are, because they are on the technology side, and they were the first to really launch that kind of app for any restaurant chain, let alone the pizza side. And they're still getting, first in glory from that app. And I know I use it, and almost everyone else I know uses it. So I would put them up there, and they are producing the growth right now. Like I said, that comp isn't going to hold for forever, because people have to realize it's year over year. So if they did, 12% last year, they're going to have, to do another 12%, that's 24% in 2 years. That's enormous for any chain. The only other restaurant chain that even comes close to that is Chipotle. And, they've fallen back even with the recent events going on there, but they're the only one I can think of that might once again approach the double digits. So, and pizza is, as you know, being in Michigan, where there's plenty of other pizza chains in Michigan other than Domino's, but the market for the big names is still relatively small because so many mom and pops run their own chains in their towns, basically. So I think the big, like 4 brands only have about 20 to 25% of the overall pizza market in the United States. And that's certainly the case if you go internationally. There might not be any pizza chains in certain countries except like a Domino's or a Little Caesars or a Pizza Hut internationally. So there's still a lot of growth there. Yeah, I like the pizza chains even at this level. I know Domino's stock's a little expensive for most people. I used to own it a year or two ago, and I sold out because I felt like the valuations were too high. And then it has just been able to keep it up and keep the growth level. So Domino's is still, like I said, I consider it now to be the new king of the restaurant chain.
All right, a couple more, Tracy, and then we'll let you go. I have one more, and then we'll get to one from the chat. But I'm wondering if you have thoughts on Dine Equity, DIN. They had earnings Thursday. Really, really bad comps at IHOP and Applebee's, down 2.5% at IHOP, comps down over 6% at Applebee's. So they have a new CEO now. I'm wondering if you have thoughts on that stock.
We were kind of talking about that one here in the office because of what, those comps were like. It's hard to know on that kind of fast casual area because so much depends on the menu now. I recently ate at TGIF and I was kind of surprised at what they're doing with their menu there. And there's so much emphasis now on like the healthy eating and that some of these chains were not considered healthy. I mean, I love IHOP too, but a lot of the stuff on that menu is not considered to be that. So, a lot of those chains end up kind of going in cycles up and down. And when they'll come into what the competitive marketplace is. So they will change the menu. As long as the U.S. economy stays well, I like most of these restaurant chains. So it would be one I would take a look at, but you're not liking any of the negative comps with any of these chains right now. It's a little riskier going into some of those, but with the new CEO, I expect that they will be making changes over there.
Actually, interesting. I read a recap of the conference call. Applebee's, they said that Applebee's, they're basically going to give up on trying to attract the millennial, and they're going back to their roots, which is neighborhood bar and grill, and they're bent over backwards for the millennial, and it hasn't worked out for them. So I thought that was really an interesting narrative. Joel, I believe you had a question.
Well, you're getting some props here in the chat, Tracy. John Dotson is saying, ask Tracy about her Weight Watchers pick. And have you had a target? Did you sell it already? What's your outlook on Weight Watchers?
Okay. Weight Watchers, obviously one of the craziest stocks this year in a good way. We bought it in my value portfolio that I run in March. It was actually trading at good valuations. They're around 14 or 15 times. And we've run that one all the way up until now. I also bought it in the insider trader portfolio that I manage, but that wasn't until about 2 months ago when one of the directors bought on what at the time was highs. And that was after the last good earnings report. I did think she was kind of crazy, but we followed her in on that trade, and we ended up selling half of our position before the earnings in case there was some bad news in that earnings report. But we're staying in the other half.
Wow.
And, I do consider the stock to be fully valued here, but if you're on the growth side of things, it is a growth play when you look at what they're doing with earnings and that 20% subscriber growth. What really surprised me in this last quarter is that quarter was the off season for the diet industry. Everybody does the New Year's resolutions and all of that at the beginning of the year, and that's when their big earnings quarter is. And then the rest of the year, especially the summer months, it's just kind of like, oh, we're going along, getting ready for diet season. But this year with that 20% comp, for some reason, and it's true of Nutrisystem as well, that people maybe, I don't know, they had the change of heart this year or something, and they decided to diet or change their ways in the middle of the year. But both of those companies are actually doing well at attracting new customers. So something is going on in kind of the wellness categories and people wanting to eat better. And you're seeing that reflected in both of these companies. And I do think both of them are really adjusting to social media and getting their message out on both Instagram and Facebook and even Twitter. But especially Instagram. If you go to the Instagram feed of Weight Watchers, it's quite extensive. And that is also making the connection with these new customers and drawing in new names like year round instead of just in the diet season.
We're talking diet and we're talking restaurants, Tracy. So you want all the people to go to the restaurants and then you buy Weight Watchers.
That's right.
I got it here.
Go to Domino's and then go on the Weight Watchers.
How about Chuy's? It's a Tex-Mex restaurant chain established in 1982. Chuy's, you ever heard of that one? It's gotten beat up. Maybe the people that are getting sick at Chipotle will go there. Do you follow this one at all?
I don't follow Chili's at all, but I would put it in the same category kind of as the Applebee's. And like I said, I just went to the TGIF, which is kind of similar. These are older names. Some of the ones have had more difficulty than Chili's, I would say, like the Ruby Tuesdays has had a lot more trouble adjusting to the newer type of menu and all of that. But these kind of casual restaurants, people are still going out. There's this kind of myth that it's only about Domino's and ordering in and then you're watching Netflix. But that's not true. And some of these names, they do have the long history, and the consumer, as long as the job market stays well, will be eating out. So, like I said, I'm kind of snooping around the restaurant chains now because a lot of them have come off their highs from what I consider to be the restaurant bubble of a couple of years ago. And now you're starting to get some good valuation. So if I was an investor, I would be looking around and trying to find the best names in this category.
I'm waiting for the Pizza Bob or Zingerman's IPO for my next big restaurant.
Ooh,
all right.
Well, Zingerman's, we get some Zingerman's here in Chicago. They ship some of their stuff here now.
They do. Tracy Rainey, stock strategist at Zacks Investment Research, giving us a lot of stocks to look at. Tracy, we're going to have to get you on here for a longer segment soon here because you cover a lot of different stocks. Thanks a lot. We'll talk to you again soon. Thank you.
Okay, great.
Boy, I wish I would have been listening when she was talking about Weight Watchers. And you know what I think is interesting about it too, is that she has different portfolios that she managed. And one was like a valuation, right? Based on valuation. So she put it in there, her metrics. And then she had an insider portfolio and a big insider buy, even after earnings started, was crazy. So different ways, she's kind of incorporating value investing. If you like to follow insider trading, another way to follow it as well.
And while we're on the topic of restaurants, I will say I went over the weekend to Ruby Tuesdays for the first time in probably about 15 years. And it wasn't bad.
It wasn't bad?
It wasn't bad. I'll just leave it at that, but it wasn't bad. Back to the stocks, though.
All right.
Stock's bad. $2 is a stock. RT Ruby Tuesday. She's right. A lot of these. I was just looking at the charts that she was looking at too. And I was looking at the noodles NDLS, and it's $3.75. And you can look at the Ruby Tuesday, and it's $2. And I mean, there is ugly charts here in the restaurants when you start getting away from the majors. And you do wonder, she said, well, it's true that people are still going out, but if 10% of people aren't going out as much, it can start to impact the bottom line in a lot of these companies. And a lot of these companies, there's a lot of restaurants out there, a lot of choice, and a lot of them are struggling to survive. Like when you look at a Ruby Tuesday at $2 here now, you do wonder if that's going to be on the board here, in a year from now.
Well, yeah, I mean, I was one of the only people in the restaurant.
That's why it was excellent.
Yeah.
We need to
great
really
service, right? All right.
I used to like Ruby Tuesday. I mean, I don't go because of the kids, but it's chaos to bring a 3-year-old out to a restaurant. But, that's not saying I'm not going to go out in the future. So aging population, maybe people start going to the restaurants again. There's some deals out there. Just find the right ones.
Okay, if you're looking for a move in drug stocks here, the President of the United States just tweeted now that Ken Frazier of Merck Pharma has resigned from the President's Manufacturing Council. Will have more time to lower rip-off drug prices. So, let's talk about Teva Pharmaceuticals, Dennis. I know you just must be so long that stock. You just can't.
So long. No. Anyways, new lows again every day. This thing makes a new low. I mean, how many days in a row have we made a new low now? 1, 2. Even before the earnings reports, we were making new lows every day. So you had 32. I'm going back. I think it's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And on Friday, made new 11 days in a row, made new lows.
It made,
is that right?
Yeah, it had an update on Friday.
It had an update, but it still made a new low.
Oh, that's right. That's right. Okay.
Stop making new lows before you start looking at going. Like, that's what my rule of thumb is when you're picking buttons. Stop making, don't buy the stock when it's still making new lows every single day. Because trend is not your friend. I mean, maybe, okay, it looks like we might not make it. This might be the first day where we might not make a new low. Because Teva is up 1.5% in the pre-market. It needs to go all the way down to 1680 to make a new low again, consecutive days there. So maybe Teva's going to buck the trend here today. Maybe your first update. Maybe it's the first time you can actually say, okay, maybe I'm going to take a shot of this on the long side. But they've cut the dividend. They got too much debt. They got major problems. It feels like VRX part 2 to me, and that's why I want no part of it.
All right. I didn't even get to mention the second. Tracy had a whole bunch of other topics that she sent us, and she wanted to talk about malls and, retails, old malls, new malls, and kind of what's evolving. But
how's your TCO doing? You were right. I haven't looked at that in a long time. Remember at 72, 73, you're like, I just should short a whole pile of this. You're saying it on the show.
I know.
It's 54.
I know, but
right.
You
were right.
I was right on that one. Fading old Alfred Taubman, rest in peace. But anyways, let's move on. We got only 3 minutes left, and we haven't done any ratings. I know there's not a whole lot out there, but is there a few you'd like to touch on?
There was a couple. Spencer, give us the highlights.
We did
there
was
no real big ones. Like the Tesla. Okay, well, we did. Did we talk Tesla already? We did, didn't we?
Yeah, we did. Aside from Tesla, we have International Paper getting upgraded at D.A. Davidson, and we have WY getting downgraded at BMO. Those are, I guess, the two bigger ones that I saw.
All right.
International Paper is not a stock that gets a lot of love on pre-market prep. We have not talked about this one probably in months. IP, old stodgy newspaper or paper company here. I mean, 3.31% dividend. What do you think? What do you think of IP?
I don't think it's a good looking chart. I'll have to see what happens if and when it gets to $51. Small gap to fill. I mean, 50 to 51 could be a buy range for the issue, but man, I just think about, newspaper. I mean, I guess the only thing that would be a positive is if Amazon is buying paper, they have to ship all that stuff. So you're going to need boxes and everything, but they probably... Well,
I mean, International Paper, we should go and break it down. I'm assuming, there's a lot of different uses for paper other than just, reading. So
sure.
That is a consideration too. And Cold Select saying the same thing, making boxes for Amazon. So it came out at the same time. I mean, there's a lot of uses for paper still. That's why it's still, a cash cow. It still makes money. It's still got a nice dividend there. But, you can call it, it's definitely a value stock, but it's something that's going to have huge growth here. It's something I want to jump into. I don't know. Not for me. And then the second thing, when I look at this chart, I think overhead supply. There's a lot of people here who are underwater in the last couple of months in this stock, even though it's been a pretty good stock overall in the last 2 years, because 2016 we were down under $35. But I just think, you got 54 looks like a headache to me. It's bid 53 here this morning. There just looks like a lot of reasons to be fading this upgrade.
Yeah, long-term monthly resistance here. You can see the stock is hit 60 back in 99, but man, this started to sniff 60 a couple times in 16, one time in 17, and it just hits that level. So that's a major target on the upside. Well, for kind of a slow news day, we got a lot of good content in here. Spencer, you want to wrap up the show and give us a update if Nick Shaheen's been located from that hurricane?
Nick Shaheen has been located from the hurricane. He'll be back with us tomorrow, as well as Joe Malandrino, who's a markets reporter and a host for NASDAQ. So got those two on the docket for tomorrow. As far as today's show, catch it again on our podcast, which is on iTunes, SoundCloud, and Stitcher. Also, the show, as it aired, can be found on youtube.com/BenzingaTV. You can subscribe to that channel to get notified whenever we go live every morning. Don't forget about Benzinga Pro. Get a free 2-week trial by going to pro.benzinga.com, and the Benzinga FinTech Summit is about 5 weeks away now, or 6 weeks, September 28th in San Francisco. Go to bzsummit.com to learn more about that. So have a good rest of your day, folks. We'll be back with you tomorrow. But until then, have a good day and good luck out there.